If you're struggling with your vitality, energy, mood, focus, or sleep, this podcast is for you. Your host, Dr. Ann Sung, ER doctor and aerospace flight surgeon, will help you reach for the stars and remove the barriers or blockades that have been holding you back from living your best life. If you've been challenged by your health, relationships, or productivity, then it's time for a breakthrough. So here's your host, Dr. Ann Sung.
Hello, welcome to It's Not Rocket Science Show. I'm your host, Dr. Ann Sung. And today we have Mr. Kekoa. He is such an awesome real estate entrepreneur, and I'm really excited to bring him on today. He has an amazing story, and essentially today we're going to dig into his mindset, how he created so many various companies, and essentially give us the basic tips and knowledge for first-time investors. And so, Kekoa, thank you so much and welcome to the show.
Yeah, I'm super excited to be here. Thank you for the invitation.
Thank you. Can you tell us a little bit about your background, your story, and this empire that you have created?
It sounds so huge, but no, it starts with really, really humble beginnings, actually. In college, I went to a university where I partied pretty hard and chose a major in accounting and a minor in girls, and then a second minor in real estate. And so of all the bad decisions I made one good decision, and that was to get a minor in real estate. I also started with a lot of sports. And so I also have a passion for training. And so I also have a degree in sports. And so that kind of all mixed together into what I call an ADHD educational background. But the good thing out of all of that is that in college, just before I graduated, I bought my first house hack. And a house hack is when you buy a house and then you rent out the rest of the bedrooms to your buddies. And so we basically had a fraternity that smelled like a locker room, had pizza boxes for days. And so it was an interesting living environment. But what was cool is that every month I made $500 net profit off of my buddies after all the utilities were paid and the mortgage was paid. And that got me hooked. I was like, man, real estate is a cool deal. So that's kind of where I got my story started. And then, for almost 20 years now, I've been doing real estate. Love it. It's my passion, and just excited now, kind of in the juncture where I'm at in life, is to help other people discover the same excitement for real estate that I have, and to discover the power of passive income, and then to see their portfolio grow in such a way that it gives them financial freedom, time freedom, and the freedom to dream huge, to do kind of anything that you want to do. So that in a nutshell is basically where I've come from.
I really resonate with that. And that's how I started my real estate journey too. And that's the reason why I wanted to do this podcast, because when you have that passive income, when you start having to not have to worry about money and having to trade time for money, especially in the clinical work where everyone's burned out right now, it gives you a sense of freedom, like emotional freedom. You have better health or less stress. And essentially, you can even contribute more at work because you're not so pressured to make that money anymore. So financial freedom gives you more other freedoms than just money.
Yeah, no, I love that you said that. We always trade time for work, and it's hourly wage to do something or hire you to do this project. But you're totally right. If you do that for the rest of your life, you feel like you're on a treadmill and you can never get off of it.
Yeah, I agree. And can you tell us a little bit about all of the companies that you have started with your co-founder?
Yeah, we have a lot of companies. So it started where, in our real estate experience, we started flipping houses. So way before HGTV made it cool or sexy, we were buying yucky houses. And this was on Oahu. And we'd buy plantation homes and then renovate them, and then we put them back on market. And most of the time we would use financing. We would use a hard money, which is the term that was used at the time for borrowing at very, very high interest rates. And then we'd hire contractors to do the work. And then if we hold the properties, we go find a property manager to manage them for us. Over the years, we started to discover, as real estate investors, it's number one, really hard to find good deals to invest in. And then it's hard to find people like real estate agents who actually know how to assess those deals and evaluate them. And then we found that it was really hard to find good loan programs for fix and flips or buy and holds. And so we were always frustrated by trying to figure out loans and how to get financing to do more deals. And then once we got a deal, then it's like, man, how do we find a contractor that we trust and that can do a good job and work hard and in Hawaii not go surfing every single day of the week, And then finally, how do you find a property management company that actually has the same values that we do? And so that was a challenge and that was our pain points. And as a result, over time, we formulated a number of different companies, as you mentioned, Ann, and that was the fact that we were needing to try to solve for a lot of these frustrations. So we started a real estate brokerage company. So we have licensed agents that list properties, sell properties, buy properties, but mostly focus on investment, multifamily properties. And then we started a hard money lending company based in Honolulu that lends money to real estate investors who want to buy properties that need rehab. So we call them bridge financing or private lending. And then we also own a construction company because we couldn't find great contractors we trusted. So we ended up opening up our own licensed, bonded, and insured construction company. And then finally, we opened up a property management company to manage our portfolio in-house. And so we started all these companies really to serve ourselves. And then as we've grown our portfolio and our passion and then our heart to help others, we've opened the door to allow others to utilize our companies. And so now it just kind of organically has grown into this really cool opportunity to be a turnkey investing partner for investors. And that's how I met you. And that's what was fun, is that you kind of fell into our ADHD system. And then we deployed all of our resources to help you get a fourplex here just really recently, and a really nice one at that.
Yeah, I talked about in the prior episode, but yeah, this is how I met Kekoa from the semi-retired MD training, got introduced to Kekoa from another fellow student. And you guys have made my purchasing process so much easier and less scary because I felt like a whole team was behind me. Yeah. So thank you.
You inherited an entire team, right?
Yes.
And all of a sudden you're like, wow, look at all these people that are helping me try to figure this thing out. And that's what we loved. And you were so great to work with because you came in with a mindset that I think is so important. And that is a mindset that, hey, I'm going to do this. And it was your first one, I believe it was. Was that right?
Yeah.
And so you had gotten the education, you were inspired, and you were like, I just need somebody to just help me kind of take that next step. And you clearly took the step yourselves. We were just able to be that personal trainer, that coach on the sidelines. That's like, hey, here's some thoughts. Here's some decisions to make. Let's take it one step at a time. And in the end, you ended up with a tremendous property.
Yeah. I think if you didn't help me structure our offer, we had like multiple terms in there, and I'm not sure if I would have gotten the property. And that's another reason why, after we discussed all of your background, all of your companies, that's another reason why I thought you would be an awesome candidate to come on the show, because you've done it from the beginning to the end, from finding deals to all the way to construction and property management and exiting. And so you essentially have had the whole gamut of experiences. And I like to go ahead and start, with the structure. I talked about in prior episode too with Simon Sinek, start with why. And then we'll talk about why you should invest in learning about real estate, investing in real estate versus REITs, versus stocks, versus cryptocurrency, gold, or anything else. And then we'll talk about in the why, we'll talk about maybe the tax advantages. And then we'll talk about kind of the vision, the how, like what kind of returns should you get? What kind of losses should you get? And then we dig into the how, which is the process. So that's kind of how I want to frame this. And so that the audience kind of can begin with their purpose, to begin with their why. So yes, why should, anyone really begin investing in real estate versus REITs, stocks, index funds?
I love it. Well, and I think, like you said, every single one of us, we're looking for a purpose in this world, and we're looking for an opportunity to not just make a difference, but to really enjoy life. And the rat race of driving and commuting and working for somebody else, and then feeling like, a little bit of vacation time given by an employer feels so limiting when we're trying to raise families and, go explore the world. It gets to be so frustrating that, we're looking at an opportunity to be able to really kind of take control to get that freedom. And that's where I think we look at stocks, we look at Bitcoin, and we jump on silver and gold, and we kind of look at what everybody else is buying, and somebody is buying a Subway franchise, and we're like, maybe we should consider that. So many options there to invest in. I am passionate about real estate in particular because you get not just passive income, which you would get as an investor sometimes in stocks or say gold, and some of that, but you also get appreciation. And then you also get the tax benefits, which are remarkable. And I know you're probably going to mention that in a future conversation or a podcast, but the tax implications of real estate can essentially wipe out your W-2 taxes, which is I mean, just tremendous if you think about that potential. And so the why, I think, for real estate is that it gives you the freedom to be able to have the opportunity to do whatever you want to do. So you don't have to go to work. If your passive income suddenly surpasses what your W-2 income is, you get to go to work because you get to go to work. You want to go to work. You love to go to work. But if you're like, you know what? I'm just going to go on call and I don't need to be there 40 hours a week. I'm going to offer 1 day a week, and the rest of the week I'm taking kids to school. I'm coaching soccer. I'm getting to my yoga class. And you know what? I'm going to take a 2-month vacation, and I'm going to travel the world. Absolutely. Because when you have passive income, the crazy thing is you make money while you're sleeping, and everybody would love to have that happen.
And so the tax benefits you're talking about, I think it's a real advantage too, because, the index funds, they give passive income. But could you talk about the difference between the gains from index funds, the REITs, or any sort of capital gains versus the income from real estate?
Well, let me just give you one example, because this is like a whole conversation that is worthy of like several podcasts by itself. There's a couple of tax books that maybe we can recommend in the future. But just one tax advantage to real estate that no other investments offer is something called real estate professional status. It's an actual IRS designation. It's on the front page of the 1040 form on your tax returns. And that little box has the power to take your W-2 taxes and wipe them down to zero. And that's because of real estate, because of depreciation, something we call accelerated depreciation, something we call cost segregation. And there's all these little terms that all simply means that real estate allows you to save money on taxes in order to build your portfolio. And this is a true story. In fact, you probably are going to interview some doctors eventually. I've got so many investors who are not just doctors, but lawyers and football players that actually have taken their W-2 income, and they're making $500,000 a year, paying a couple $100,000 in taxes, and through real estate, eliminating the $200,000 in taxes and utilizing those funds to actually buy more real estate, which then gets you more passive income and appreciation. And so it's just like the government is giving you the money to keep having free money come to you in your sleep. Why would you not do real estate?
Yeah, I agree. It's just to summarize for the audience, what Kekoa is talking about is a real estate professional status, which you have to work more than 50%. Like if you're a clinician, if you work 20 hours a week as a clinician, you have to work or materially participate in real estate more than 20 hours for you to qualify. So if you're working full time as a clinician, you may not qualify, but you talked about the depreciation and cost segregation, bonus depreciation, and essentially those are just paper losses that anyone can create. You don't have to be real estate professional status to show that you actually have a net loss, a huge loss the first year, so that your income is not taxed. Is that correct?
That is 100% correct. Yeah. And you're totally correct. There is a material participation requirement. And so that's something that some full-time folks will take a look at and say, hey, at some point in my future, if I start real estate investing now, I can start reducing clinical hours, for example, and increasing real estate hours so I can actually get that real estate professional status. But it's also really good for husband and wife teams. One is the W-2 full-timer and the other one may be part-time or does the children. And so that is the opportunity for that spouse to then do 750 hours is the number of hours in a year that's required for real estate professional status, which actually breaks down to like 14 hours a week, which is not tough when you start building a portfolio. So that allows you then to take the full advantage of what the IRS calls real estate professional. But like you said, every one of us, because of real estate, has the opportunity to take the depreciation, accelerated depreciation, cost segregation. In fact, just today, I have my cost segregation folks do a study for me on one of the properties I just acquired and paid $600,000 for the property. And I'm going to take a loss on it this year, just on the segregation of costs of $180,000. It's huge. I mean, it's game changing.
Yeah.
And so I'm not going to pay taxes for 3 years in a row, legally, not pay taxes.
Yeah.
3 years in a row. And I love it. It's fantastic. It's like on paper, I am the poorest person you can imagine. And I love it. I love telling people I make no money.
Yeah. Yeah. And for those of you who are new in cost segregation, essentially it's basically what it does is that first you can normally depreciate the building because the IRS allows you to basically, they say that the building loses value over time. But if you do a cost segregation study, essentially what you're doing is you're taking components in the building and say they're losing value quicker than the 15 years or 7.5 years, or maybe they could lose value in 5 years. So essentially what happens is that, for example, my fourplex right now, I am about to do a cost segregation study. My standard building depreciation is about $11,000 a year. But because of the study, I get to depreciate parts of the building more. When I finish the cost segregation, it looks like I'm going to be able to deduct 60 to 90,000, which that's going to count against my rental income for I don't even know how many years right now.
Right. It's huge. It's going to make you have a loss.
Yeah. So, and it carries over, like your losses will carry over year after year if you don't use it. So essentially that's one of the huge benefit of real estate is that your rental income that you're getting in the first few years, you don't pay taxes legally while your properties is appreciating in value and you're building equity. I think mine has already went up by 37,000 in the past 4 months.
Easily. Yours is in a great location. You probably have even got more equity than that. And so, which actually brings us to a good point too with real estate is when you're in a good location and you select based on a great location, you not only get to utilize cost segregation, like you said, and depreciation, but this natural appreciation, you said 37,000. You are hard pressed to find a stock that's going to do that consistently over time. But real estate, I mean, I always say since Jesus roamed the earth has gone up over time. And so the powerful thing about real estate is appreciation is because of nothing that you do. I mean, you're going to force appreciate when you do renovation. So we call it forced appreciation because you're forcing value through painting and new bathrooms and new kitchens. But there's a natural appreciation just because the market has gone up. I mean, if all of us could have bought a neighborhood back during the subprime market drop, and we could have bought real estate then, we would have all gone back and said, yeah, we'll buy 100 houses because the value of those houses has almost doubled since that last crash. Mm-hmm. Same thing, even on a natural appreciation. Most markets are increasing, nominally 5% or so. But some markets, like we're in Vegas, they're appreciating tremendously right now, like way over 20%. And it's fantastic. There's markets in Washington. I own a 5-plex in the area called Lakewood. And over the last couple of years, it's appreciated 14% per year. So the beauty of that is that, in a couple of years, I'm going to get not only tax write-offs, but I'm going to have an asset that's going to be worth even more. And so now the equity that I have keeps growing and the mortgage payment keeps getting smaller because of the rent I'm getting from the tenants who are paying my mortgage down. And so now with all of this extra equity that I have, the power of real estate is now I can take that equity and go buy another 4-plex or another 5-plex. So eventually there's this system that creates where it's so powerful that your real estate portfolio funds your real estate portfolio, right? And
yes.
So then everything just picks up on speed. And we have some clients that, man, they just were buying single family homes just a couple of years ago, but then we just kept trading houses for another property. And now they're looking at 50 units, 100 units at one time.
And I definitely agree with you. You touched on so many good points on the advantages is that number one, yes, we talked about the tax advantages. Number two, other people pay your investment versus stocks and bonds and crypto, index funds, REITs. You pay those investments. But in real estate, other people's money pay your investments, which you don't see anywhere else.
Yeah, your equity pays for it, right? Your equity. But you can't do that with your stocks. If your stocks go up in value, you can't call the company and be like, hey, can I get that portion that went up so I could go buy more stocks? And they'll be like, you're crazy. But in real estate, you call a bank and say, hey, my property has 300,000 value increase. Can I pull that out? Absolutely.
Yeah. And that brings me to the example with my property in 6 months, I'm going to be able to refinance. And essentially the gain, the appreciation, the gain in equity will allow me to pull out minus my, current mortgage, but will allow me most likely to pull out, that difference and 70 to 80% of that difference. So what that means is that if my mortgage is 300,000, a new appraisal is 450. So that means I have 150 and then maybe 80% of that I can pull out. Is that correct?
That is correct. That's such a powerful scenario that I really want to break that down, because that is the power of real estate. So let's say you buy a fourplex. Let's just use round numbers at 500,000. And let's say after you force appreciate, renovate it, you did a new appraisal on the property, and the property is now worth $1 million. Wow, that's awesome. And you only put $100,000 into renovation. So you paid 500, you put 100 in, you're $600,000 into the property, but it's worth $1 million. You go to the bank and you'd say, hey, I spent 500,000, but I put a down payment of 20%, which is roughly 100,000. Is that right? Yeah, 100,000. Yeah. And I put 100,000 of reno, so I'm 200,000 out of pocket, but I owe 400,000. It's worth $1 million. What can you guys do? They'll say, if it's worth $1 million, 70% of $1 million, 700,000. We'll give you a loan for 700,000 on the property. And you're like, well, I only owe 400. Then they'll be like, no problem. We'll write you a check for $300,000 at closing. And so now suddenly you have a house you paid 500,000 for on a loan. You only put out 200,000, all in at 600, but you got a new loan for 700. You just made $100,000. Or you get to pull out that equity. Uh-huh. You take that money now and you go buy another asset. And what we call that is eternal returns. It's kind of like it never stops, because you burr it, buy, renovate, rehab, rent, and then repeat it. And then now you're out no money. You basically own the property because of the fact that the value went up. Mm-hmm. You didn't have to put any money into it. You did initially, but you get to pull it all back out. Mm-hmm. Does that make sense?
Yes. Just to clarify, they're not actually giving you 70 or 80% of the new appraised value minus your mortgage. They're giving you the 70 or 80% of the new appraised value, period.
Yes. They're giving you a new loan for 70%, but they'll pay off that other mortgage.
Yes, exactly.
Yes.
Okay. Yes, exactly. Okay. Got it. Yeah. I'm hoping to refinance and see how much money I can pull out. And essentially it's like the BRRRR method. I am recycling the same money to put into maybe another fourplex. And you can do that over again. You refinance every 6 months or more.
Yeah. So. Yeah. And you just paid a little over 400 for yours, right?
407. Mm-hmm.
407. And it's a fourplex, mm-hmm. North Vegas. We just sold another fourplex, 495.
Wow.
Yeah. It's crazy. So, give it a little bit of time and you're going to be popping over 500, 525. And your equity there is going to be just beautiful. And so it's a good buy and hold. Like you just hang on to it.
I'm so excited.
I know, it's exciting. Well, but we should also talk about the fact that another option for you, Anne, is that suddenly you have a fourplex. Let's say it's worth $525,000. You have $100,000 of equity. You could pull that out, or the other, and hold the 4-unit, pull out 100, and then go buy another one with 100, which $100,000 will get you basically a $400,000 property, 25% down.
Yeah.
So probably at that point, a triplex.
Yeah.
But you might say, I'm excited. I love real estate. I'm ready to go big. Like no more residential, which is 4 units or less. Let's do commercial, which is 5 units or more. And you'd say, let's sell my fourplex and let's get 525 because I only owe, say, 300,000 because you put a down payment, which means you're going to clear 200,000. Your gain's 100. You could do something called a 1031 exchange, just a tax deferred exchange, which then you sell it. The money gets placed into a facilitator's account. You don't get to touch it, but it goes all towards the next building. And now you've got the $100,000 gain plus $100,000 you already had that you put down as a down payment. So now you're sitting on 200,000, which is then basically an $800,000 purchase. And so now you're looking at a 6 to 8 unit property. And when you get that large, your economies of scale for property management and renovations and all of that actually goes down per unit. Yep. And now your income, or what we call return of cash on cash, actually goes up. So many powerful ways to continue to make money.
And like you brought up a huge tax advantage, like you said. Number one, depreciation. Number two, if you have rep status, you can shelter your W-2 income. Number three, you can also, if you sell a property, you can do what's called 1031 exchange. And essentially you have to sell and buy another property within is it 90 days?
Yeah, you have to identify within 45 and then you have 90 days to close.
Okay.
But which is really tight, but the strategies are
you could delay the capital gains tax on the sale of your property, and you can essentially use all of the proceeds towards that next bigger property. And that's how you can build wealth so much faster.
Yes.
So thank you for, kind of breaking that down. And I think that's a good segue. You talked about the cash on cash. So I think that's a good segue to the what. So we talked about the why. There's so many advantages. And now the what would be, what is really my risk versus like, what kind of risk should I be expecting? How much is too much? And how is it compared to investing in stocks and real other forms of investment like crypto? And then what kind of returns should I be expecting?
No, that's great. So I lost a lot of money in the stock market when the last crash happened. A lot. It kind of disappeared overnight. It was tragic. And my real estate portfolio didn't disappear overnight. The value went down, but when I held it, the value now is still more than I paid for it and still more than during that point of the crash. But my stocks, once the value went down, those companies closed off and left Earth. And so what's tough sometimes with stocks is that it's more volatile, in my opinion, than a real estate portfolio. And so for me, I diversify. So I like Bitcoin and I like, all the fun things of I own some Disney stock because it's fun. And, we got some various stocks in Tesla because it's cool. But I don't get my passive income off of those devices. So my passive income comes off my real estate portfolio. And I typically look for at least 8 to 10% cash on cash. I target 15% cash on cash. So what does that mean? It means that if I spend $100,000 on a down payment and renovations and closing costs, then at the end of a year, I would hope to get $15,000 back. That's 15%. So that's pretty good.
Net.
Yeah. Mm-hmm. After all expenses are paid, that's pretty good because I still get the real estate portfolio. I still have the asset. So if the market goes down, the real estate is still mine unless I decide to sell it. So most real estate investors, we play the long game. So we're not trying to sell tomorrow unless you're a flipper. And I've flipped over 200 houses, so I've been there. But even on the flip game, if you buy correctly, because the money is made on the buy. And so I'll say that one more time. The money in real estate is made on how well you negotiate the purchase price. The lower the purchase price, the better you're going to do long term. And so with multifamilies, when you buy it and you get a good price on it, you hold it. And if you're going to hold it for 10 years, the good news is the market's going to keep going up, but your rent also keeps going up and your mortgage keeps getting paid down. So you got appreciation, you got income coming from your rentals, which is fantastic. And as that mortgage gets smaller, your cash actually gets bigger. And so now your returns continue to increase over time, as well as the appreciation on the asset. So we're at a place now where my passive income is far more than we need to live on. So it's great. It gives us an opportunity to do kind of whatever we want to do. Last year, I bought a 45-foot bus in Louisiana. It's a 45-foot motorhome. It's $500,000 of absolute depreciation and terrible maintenance and always something breaking down. But I can tell you that the memories that we've had in the year we've owned it, just with the kids and driving around the country, has far exceeded anything that I could imagine owning that would give that kind of joy. And that's all funded by passive income. My stocks never did that for me because I can't live off the income that stocks derive when they increase, unless I'm a day trader. But then now I've got a job. And the friends that I have who are day traders, man, they're up. In Hawaii, you got to be up at like 2:00 in the morning for the New York Stock Exchange. And then you got to work it and you got to be constantly stressed and you got 15 phones monitoring things and spreadsheets. But for me, I'm making money just sitting here talking to you, Ann. It's fantastic.
Yeah, I agree. And the thing is with the real estate, it's because you're kind of using the same money. You can use the same money over and over again because you can refinance. But with stocks, you can't take it out, keep the same stocks, and then go buy some more stocks. It doesn't work like that.
Yeah.
And diversification, I think, is key. You want to, things are always going to crash. It's very more volatile. Like you said, that the market, you want to have something that's less volatile and more stable, like real estate, to kind of help you out in times like this past year, essentially.
Yeah. Well, and the thing with stocks is, let's say today you decided, I'm going to buy Bitcoin. you're gonna project what Bitcoin's gonna do based on what you see and what you think and maybe what you hope. With real estate, when we project the next 12 months, we're basing it on lots of facts. We're looking at what was the property taxes last year as an expense. It's probably going to go up historically this many percent. So we can estimate that. It's really clear. Utilities are pretty consistent year over year. And rent rates, we look at all the comps in the area. We look at what was currently getting on rents and what we could get. And so we estimate it out. And it's pretty consistent that if we're 2 bedrooms in Las Vegas, we're going to get about $950 to $1,000 all day, all night, all North Vegas. Next year, $950 to $1,000. The year after, it's going to go up $25 or $50, So it's really consistent and very predictable, which is what we like. The unpredictable part is the natural appreciation. Because the natural appreciation, that's where the market could crash and the value goes down. But with rental properties, your tenants are signing a 1-year lease. They don't care if the market goes down. You still get $950 per unit per month for each of your units. And so they just continue to pay you. And if you select good tenants, then no matter what the market does, they've got jobs that are going to pay the rent because they need a place to live. This is one of the basic things of living, right? And so the risk to me on real estate is predictable. Where I can't, when I throw money at Bitcoin, I'm just like, yeah, let's just see what happens. It'll be fun, Because you don't know. I mean, we all have heard, if you would have invested in Bitcoin when it was $1,000, you'd be rich right now. Well, is it going to do it again? Nobody knows for sure. But if you're going to invest $100,000 in Bitcoin and a year from now hope to have 15%, it's a complete gamble. Like you have no idea if you're going to get 15%. But with real estate, I can, with pretty solid calculations and conservative evaluation, be probably 90% to 99% confident that I'm going to get 15% based on my numbers and negotiations.
Yeah, it's a very carefully calculated risk before you go into a deal.
100%. And you were so good at it, Anne. When we were evaluating your Vegas deal, you're like, I remember I need to ask about this. And what about this number and that number? And what was awesome is we could talk through that with real estate. If you called and said, hey, maybe we should all buy Tesla. What do you think it's going to return next year? I have no idea. Good luck,
Yes.
But with real estate, I can tell you, hey, you're probably 8. And we did a spreadsheet and, we were telling you, hey, it's probably 10, 11% cash on cash. And then you're just like, hey, this sounds good. And we're going to need to do some creative stuff here. We're going to have to cut back on cash in order to win the deal. And, that's where we negotiate. But the nice thing is what that return is going to be essentially.
And would you be able to talk a little bit about, the returns, but in terms of different types of investing? Because, there's the limited partner passive investing into a multi, huge 100, 400 unit apartment syndication deals. There's also the investing where you look for a deal, you work with an investment agent team or turnkey investment agent team, you hire property managers and then bookkeepers, and then you essentially collect the rental income like I am. Would you be able to talk a little bit about, is there any difference in returns and difference in time investment in those two, or maybe there are even more options too, but those two to start for beginners?
Yeah. I love you as a model for beginners because I think you did it the right order. You started off by owning something smaller, so 4 units or less. And then now you're looking at a little bit larger, but you're also looking at other passive income opportunities like syndications. So there are some people who you can start real estate in any different order. Some people start right with syndications and then they just throw their money into the hat and they, look at the prospectus or an executive summary and it says, I'm going to make 10%, 12%. That sounds good. I don't got the time. Let's do it. It's fine. The challenge with that is that the tax advantages sometimes with those vehicles would be less than what you did, Anne, or what I do when we actually own the asset, as a full owner. And so those are some of the differences that, you'll get when you actually own the asset yourself. Now, do I diversify? Absolutely. But majority of what I love to do is actually own the assets because you get the opportunity to not just get that, remember 10 to 12%, but you also got the appreciation on the asset. And you own the asset, you control it. Syndications, typically what they're going to do is they're going to cash you out at some point in the future because as the value of that asset goes up, the partners who created the asset are the ones who are going to have a clause in there that allows them to cash you out at your return. So you're happy. You're like, woohoo, I made 12%, just as they said. Right on. So they honored their commitment. But what you don't see sometimes is those guys, because of natural appreciation, suddenly went, man, we're going to make millions of dollars because the appreciation play went so strong. And so that's the part of those syndications that you don't get as an actual hands-on owner. And so for you, that's where you get in Vegas. You're going to get the natural and you'll get the returns from your rental. But I definitely say for new folks, kind of look at your time. How much time do you have to invest into real estate? And what are your goals? So if your goal is to one day have passive income and live off of passive income and work only if you want to work, then the powerful way to get there is actually owning a portfolio. Because that is where the majority of your tax benefit comes from. And the tax benefit, remember, is the lower you pay in taxes, the more money you have to invest in more real estate. So that's the exchange there that you want to be able to have, number one. The natural appreciation, remember, also is powerful because if you own the asset, whatever equity you gain, you can pull that out and go buy another asset. And so suddenly it just starts this powerful snowball effect where your own portfolio, like we said earlier, is funding more assets, which are your portfolio. So as those mortgages get to zero, your cash flow now is basically 100% of whatever comes in for rent. And so that's just, it's powerful. Now, syndications, you won't have that happen because you're going to be in for a limited time. You'll get a return, which is great. And I invest in some of those as well. But those you have to be really careful for because somebody is going to be managing it. And as a limited partner, you're going to not have management control or management insight or even any management input, typically speaking. And so you're trusting that somebody else is doing a great job, which means you want to vet them out really, really well. But with your own properties, you are full control. If you just one day said, you know what, we're getting all these tenants out, we're doing traveling nurses, because I heard they're phenomenal. You can do that. Or I'm getting everybody out and making Airbnbs in every single one of my units, and I'm going to go with $200 a night, so I make $6,000 a unit per unit. You do that because you're the manager, you're the owner, and you have control. Or suddenly you find an asset that you want to buy, you can 1031 exchange it. Or if something happens in your life and suddenly you need money for an ailing parent or a college tuition, then suddenly you can pull an equity line of credit because you own it. And then suddenly you pay for college tax-free or a funeral or a celebration of life, whatever you need to do, the power of owning real estate is tremendously greater. Did I answer that question?
Yeah, I think it sounds like it really depends on the person. Are you the person with enough time to educate? Because you do have to educate yourself. If you want to have full control, you do have to educate yourself on, the basics of real estate, how to assess a property, how to calculate the cash on cash, which there's a spreadsheet, which makes it very easy. And how, initially setting up property management to have a good team, a good real estate team, a good lender. And once that's set up, once you gather that basic knowledge, it's a lot easier to go to the next property and the next property. Now, if you're an investor who doesn't have as much time, then apartment syndications, it's almost like a team of experts, but you have to vet the company very well. And you have to see their past portfolio, past deals. Yeah, like you said, you really have to vet them. And only certain companies will pass on the bonus depreciation to their investors. Some of them will not. So you have to look for the companies to get those who will pass on those tax advantages to you. The good side is if you don't have time to really dig into real estate, to educate yourself, to take these courses, to hands-on kind of like, manage a team. I'm not saying it takes a lot of time, but you do interact with multiple members of the team, then it might be something to look into because you do have to interact with CPAs and bookkeepers, property management, general contractors. Though your team really made it very easy for me because you guys had all these people ready for me to talk to.
Yeah. Well, and that's why we started the team the way we did, is because that way somebody who has no time and are thinking of putting $200,000 into syndication, we'd rather help you take that $200,000 and buy your own portfolio and have just a little bit of extra time commitment, which is like you said, evaluating the deal, calling a CPA. But those are all good calls. Hey, CPA, how do I take advantage of all these rental income I've got? That's a great call to make, right?
Yeah.
Or calling an attorney to say, hey, I got to start an LLC for this new asset that I just bought. I'm going to be a property owner. Those are fun calls. And so that's the cool part about, I think, what we get to do is to make it super easy. So someone like you who's successful, busy, family, commitments, marriage, that's what you're supposed to do. And what real estate passive income is supposed to do is once you get the framework set up, it just passively produces that income for you.
And what do you think for a beginner real estate investor? I'm curious, what type of goals should they set? Like, because we're talking about the what. Like, should we say, it really depends on how much money they have to invest, of course, the down payment and everything. Should we say, maybe my goal in a year would be to have passive income that will cover my very basic needs, like, I don't know, 1,000, 1,500 a month or something like that. How would you recommend someone to begin setting that real estate investment passive income goal?
Yeah, that's an excellent question. And it's so different for every single individual based on their income level and what their tolerance for risk is and appetite to grow their portfolio. That's number 3. And then number 4 is, like you said, how much cash reserves they may have. But typically, if you know that you have a goal in place to build a portfolio, the best is to kind of get a sense of how many units would you like to have? Because each unit, typically in every market, a 2-bedroom is going to rent somewhere between $800 and $1,000. And so if you think about that, a 4-plex, like yours, you paid $400,000. And what's your mortgage on that right now?
About 300.
300,000.
Oh, well, it's rolled in taxes and every. I think it's like 1,500, but when you roll taxes and everything, it's about 1,700.
1,700. So that's beautiful and your rent the projected rent is $1,000 a door or $900 a door?
Well, it's $950 plus $110 bill back for the renovated unit. So essentially what we can say is approximately 4,000, we'll say a little over 4,000.
Yeah, a little over 4,000 is already covering all your utilities because you're billing it back. Mm-hmm. Your property tax is already inside of your revenue. So you're making $4,000 a month. Your $1,700 debt payment includes property taxes. Yep. So you're basically clearing $1,200, $1,300 a month.
Yep. And then a little bit to the property management, the 8% to property management.
That's about it. 100. So you're about $1,000. So that's a really good kind of high level guesstimate of what approximately somebody could look at as a brand new investor. Is that, if I can get a 4-plex and I can get pretty decent rent, then I'm going to clear somewhere around $1,000 plus or minus, depending on the location and the amount you pay for it and how much you put down, because you put 25% down. And so that's a good gauge, because that means that $1,000 extra is flowing into your pocket from money that was kind of just sitting in an account. And so that's $12,000 a year. And if you put in, $100,000, for example, that's a 12% cash on cash return. That's pretty good, right? So that's just back of the envelope kind of math. And so then a brand new investor would look at that and say, yeah, that sounds pretty good, because the way you think about it is, well, then if I can get 8 units or 12 units that are all doing something similar, then I start to reach the amount that I'm getting as a W-2 worker. Mm-hmm. And then that's like, wow. So if that's the case and I want to get $1,000 a month, then that means I'm going to need, you're getting $1,000 or 10,000, you're getting 1,000 off 4 units. If I want to get 10,000 a month, then I need to get to 40 units, right? Just kind of all back of the envelope. And so 40 units, that's not too bad. 10,000. Okay, great. So I have a W-2 job. The best I can do right now is work that job hard, grab some extra overtime, and divert all that money back into real estate so I can get to 40 as soon as possible. Because at some point here in the future, I'm going to get $10,000 a month of passive income. Mm-hmm. And I'm going to do that because of my W-2 income as down payment. And that W-2 is great for getting a loan, because you have a source of income right now to build that portfolio. Eventually, when you get 10,000 passive income a month, the bank's like, oh yeah, no, the portfolio is going to qualify, no problem. But right now you're balancing them both. But imagine how nice that would be to suddenly have 40 doors, 10,000, and I say 40, so we should probably just do ranges, 30 to 50, because the market's changing. But that gives you an idea of what you're kind of looking at. Now, how realistic is it to get 30 to 40 doors? We have some brand new investors that I think bought where are they at now? They just bought a 64 unit and they're in their second year of real estate investing. So absolutely possible. Not at all.
Yeah.
Especially when you have a team like ours behind you, we can help make it possible. Yeah. The other way that I put it too is for a lot of new investors with young families. So I always say it this way, is if you can buy a fourplex like yours, let's just keep using yours as an example, $400,000. If you put on a 15-year mortgage, your mortgage now probably goes to like $2,000 a month. So in 15 years, if you pay that off, you're still going to clear like $800 a month for the next 15 years plus, because rent's going to go up. Then in 15 years, you've got a debt-free property. If you paid $400,000, it's probably worth $600,000, $700,000. And whatever the cash flow is, it's 100% debt-free, right? So in 15 years, imagine what you could do with a debt-free asset with that kind of cash flow. And I always tell all my young clients who are just starting off, I'm like, buy assets now for 15-year mortgages, because by the time your newborn is graduating from high school, you've got an asset that's going to pay for their college. Done. You've got an asset that's going to pay for weddings. 30 grand? Done. My 30 grand off of a $700,000 free debt-free asset, you'll be like, I'll take a line of credit, spend $50,000, son, have a blast, So the power of that is great. So that's why I tell new investors is just think about what you want to do in the future with financial freedom, and then back that up, and then meet with a team like ours early on, because it's very different. Everybody's customized, right? And everybody has a different kind of a income structure. How much do they have in their savings? So brand new investors, sometimes they don't have big W-2s, but they have big savings for some reason. Well, we can leverage that and escalate that pretty quickly as well. So.
And that leads into, some of the new physicians, if you're a resident or if you're a new attending, you can, if you're going to live in it as a primary residence, you can have very, very low down payments. Sometimes there are some loans that will do 3%. There's some loans like 10%. And then if you're in the military, you have amazing benefits to get loans. If you live in that primary property for 2 years out of the prior 15 years, then your capital gains tax are actually excluded. And I think it's huge. You talk about, well, there's several things. Number one, yes, my property right now, it's essentially replacing it will pay my rent and groceries right now with a passive income. So, yeah. And for the first, it's going to be many years, I don't pay taxes on it because of my bonus depreciation. I'm going to take my paper loss I'm creating for the first few years because of depreciation. Yeah. So I think that gives a sense to the audience, like how huge it is to like the tax benefits. And number three, you talked about visualizing the what, and then you go to the how, because, I think for a lot of people, it just seems like so much work to learn about everything. But if you broke it down very nicely, like, if I want to make 10,000, then I need 40 units. So, I can start with 2, I can start with 4, and then you break it down even more. And now we can talk about the how, the process. And so really, and it's after you start breaking it down, I think it's worthwhile to create a 90-day rule. Sometimes like a 1-year goal seems, you can have that vision, but like to take action, it's worthwhile to make a 90-day goal and think about the habits, think about the calls you need to make, think about the books you need to pick up, the podcasts you need to listen to. So I think going further along now to the process, the how, for somebody who has zero experience in real estate and what they learn in real estate is essentially what we just talked about. What would you say, what's the next step for them? Next 3 steps, just 3, so we don't overwhelm them.
Yeah. So if you have 3 things that you can do right now and you are ready to get started, one is, like you said, one book that will change your mind is the book of, gosh, I got so many, but I think Robert Kiyosaki's Rich Dad, Poor Dad still has to be my number one. Yeah. So pick that up, audiobook, podcast, book, or whatever you can do, just get it. I've read it several times now over the years, and it will change your mindset as to the power of real estate, everything we just talked about. So that's huge. Now, there's so many podcasts out there. If you're a brand new investor, there's so many. If you want to be in flipping, then there's like Bigger Pockets. If you want to be in wholesaling, there's Wholesaling Inc. If you want to be in Airbnbs, there's Airbnb Automated. Like there's so many out there. So just get on YouTube and flip through the ones that look like they got the most followers, which means they probably got some credibility, and look at the reviews. But always remember, everything you hear and everything you read has to be filtered through your own network. So if you're listening and you're brand new and you're part of Anne's circle of friends, then be sure to check in with Anne just to say, hey, this is what I heard. Does this sound legit to you? Like, can I really pay my monthly rent and groceries in a month off of my first purchase? And you'll be like, Ann will be like, yeah, you can do that, So always vet that information because there's so much out there, and social media makes things look real and factual when sometimes it's not. So I'd say that. And then number 3, I'm going to say it a little bit selfishly, but I'd say find a good team like ours. There are other teams in the country that do kind of what we do, but especially for physicians and other busy professionals that, and that you folks probably have a circle of friends with, it's just tough to get into real estate because you're just like, I don't have time to add that to what I've got to do. Like I got enough on my plate. So that's where a team like ours, and there are many teams in the country that do what we do, and all of it do it different markets, different varying degrees of services. But find yourself a power team is what I call it. A power team is a great broker, a great lender, a great construction contractor, a great property manager, and a great mentor. So if Ann's your mentor, you're done. So that's easy. Now you got to go find great brokers, lenders, construction people, property management. Sometimes people love doing that a la carte. So you'll go source a number of different things, and that's totally great. And other times you find a turnkey partner because all of that kind of comes together, and that makes it a little bit more efficient. So I'd say those are probably the 3 things that I would suggest.
Yeah. And I think the cities don't matter as much. I think some people feel comfort that they want to invest in their own city, but I invest in Vegas. I live in Houston. When you have such a great team who helps you with every step, it really doesn't matter as much. And the good thing about Vegas is that there's no state income tax. So
that is very true. And no state corporate income tax.
I didn't know that.
So like some friends of mine named Kenji and Letty, they're just moving their corporate operations to Vegas. I've done that same thing. So for the same reasons. So yeah, it's very, very, it's another strategy that, and you could talk, probably in the future, do another podcast on just how do you structure your organization and where do you locate them and how do you create LLCs and all of that. That's a whole nother level. But for just getting started, I would say, don't let your mind get caught up on all the things that you got to think about. Just think about those couple things. Get inspired through a book like Rich Dad, Poor Dad. Get informed through podcasts if you're on a treadmill. I listen to podcasts every day. I'm on my treadmill and I'm always listening to something just to check things out. And then having great power team. I still have a great power team in every market I'm in. And I'm happy that we get to be a part of your power team, Ann. So I would say the same thing for everybody else.
Thank you. Thank you. We'll be sure to have your info in the show notes and the podcast link to your team because you guys are fantastic. They have like 5 or 6 people essentially calculating the cash on cash already for you and even estimating how much renovation would be, any value adds to the property. And they give you kind of like the pro forma, which is post evaluation, post value add type of cash on cash you can get with the address, with photos, with the files in Google Drive. I mean, like it doesn't really get more like easier than that. So
well, we like to hear that. That's what we aim to do. It's not always perfect, but
yes.
But yes, so, definitely try to do that.
And just to summarize, yes, get Rich Dad, Poor Dad to start. Find a podcast depending on, kind of your goals. If it's multifamily, you want to start single family, short-term rental. Number 3, either reach out to Kekoa or reach out to any of your friends who invest in real estate and have them refer you. Number 1, an investment real estate agent who understands cash on cash, who understands value add, because not all real estate agents, would you say what percentage of real estate agents are investor agents?
Very few. That's why we became our own team, because you're 100% right. I'm glad you brought that up. A lot of investors get frustrated. They get all inspired. They're ready to go. They call an agent, and then the agent just doesn't help them find a deal. And after a while, they're just like, hey, this isn't for me. I can't get a deal. And it's not because it's not a good industry or a great asset. It's because you got to find an agent who understands investment properties. And I would say, ask the agent, how many doors do they own themselves? Because if they don't own any properties themselves, how are they going to know how to show you how to run a cash on cash on a multifamily property? How do they review the leases? How do they review the T12? How do they take a look at the property taxes and all that goes along with a rental property? So that's where, an investor agent is absolutely essential.
And I do want to ask you also on one thing that I just got reminded. How do you manage the mindset of people? Some people don't like getting debt. And this is taking out loans for real estate is an emotional burden. Do you have any comments on that?
Yeah, well, Rich Dad Poor Dad is going to help, give you some mindset on that as well. But for me, if you can leverage debt to obtain an asset, not a liability, so not a car, don't buy a motorhome like I did, but if you're just getting started, use debt to buy assets because the assets pay you money. And if you leverage the debt well, because you're putting 25% down and you're evaluating the deal, so you're buying it at a great value. So like, and your property, you leverage debt, but now your debt has allowed you to get a property that's giving you enough money to pay your rent and your groceries. And you've just made probably $50,000 to $80,000 of equity. I mean, why would you not leverage a little bit of debt? Because you have an asset, and the asset doesn't disappear like a car. The asset still is there. I mean, if it disappears in a hurricane or a fire, you're insured and they rebuild the thing for you. So to me, debt is a smart utilization of the opportunity to use someone else's money in order to help build a portfolio that you get to benefit from.
That's an awesome answer. I will tell my friends.
Yeah, well, and then right now, and I mean, things are going to change whenever this airs or if this is in the future, but right now, in this point in history, the interest rates are so low that it is basically free money because the inflation rate is higher than the interest rate. And so therefore, all of us as investors, like I'm in contract for 160 units in Vegas right now. It's like, I'm going to go buy as much as I can because it's basically free money. Like, why use your own cash when you can use the government's money, somebody else's money, go buy these huge assets?
Yeah, that's essentially, it's not debt if it's acquiring asset and making you money at the same time. Because, or else if you're losing money on it, if it's depreciating, then it's just called a liability. But this is leveraged debt.
Yes.
Is the summary. And I want to kind of move into another part of the mindset because, my podcast, it's all about, health, relationships, having deep relationships, fulfilling relationships, and optimal productivity, like achieve optimal human performance. And I want to know what has been the mindset that has been useful for you to be able to create everything you've created. What, I guess, how do you manage, like if there's any negative self-talk or perhaps it's a failure? So what is like your mantra to get through everything to create all this?
That's awesome. I think I'm sponsored by Starbucks. So a lot of caffeine typically helps my days. But yeah, no, I've always been into fitness. I truly believe that taking care of your body is one of the best ways to ensure that you are going to be around to enjoy all the passive income and all of your kids and your marriage and all those wonderful things. But it really starts with health. And for me, health is not just physical, but it's also spiritual, mental, financial, and then also in the mind. And so I start off, I'm at the gym religiously 6, sometimes 7 days a week, just because it's such a routine for me. And I know it's crazy, but I'm there usually about 5 a.m. So I wake up at 4. And I'm there for 2 hours until 7, and I'm home by the time the kids are getting ready for school. And every morning, it's just a perfect time. It's my time. Nobody's awake. The gym's quiet, and it's a chance for me to work on myself. So I listen to podcasts. I do 30 minutes of cardio because I love eating ice cream and I love carbs. So I have to do cardio in order to keep the abs. And so 30 minutes, I'm listening to a podcast. And if I get a great podcast, I'll go longer. And I'm like, yeah, this is great. And then during the time I'm lifting, I actually have a notebook with me. Everybody in the gym's like, man, you track your weights and you track, I'm just like, yeah, absolutely. But actually what I'm doing is I'm putting down notes to myself of things I either need to do that day or things that I need to change, And so sometimes the things I need to do that day, it helps me during that morning time to get ahead of my day by just listing off, some of those stresses, because if you don't write it down, it just kind of gnaws at you all day. And that internal stress starts to eat away at your physical health. Medical research science has now indicated that stress is a huge indicator of some really huge ailments that can happen, with your physical body. So that helps me. But the other part is things that I got to change. So I'm constantly debriefing how yesterday went and what happened with my team and what's going on with my portfolio, or, what did I forget? And so that really helps me in my day. So that 2-hour block is really a meeting with myself. And that really helps me out a lot because you're right. There's a lot of limiting beliefs that come into our minds all day long, every day. And then social media now, I'll post something about a property I bought and someone's like, well, where did you get your money? You sell drugs or what are you doing? And, what I mean? It's so negative that if you don't start your day with a mindset on positivity and health and feeling on top of it. So for me, writing all those things down helps me come home feeling like I'm on top of the world. Like the rest of the world hasn't woken up yet. And I've got a to-do list. I've got things I got to change list. I'm physically ready to go. I'm hungry. I'm ready to rock and roll. And everyone else is like, oh, I'm so tired. I'm like, get up. It's going to be a great day. You know? So that definitely helps me out a lot. I do have a faith background as well. So that helps me ground myself, a lot as well. I have a very supportive family, which is really, really awesome. I tell all my buddies who are single to marry well and marry up because that's huge, right? And so for me, that helps me. I would say to the new investors that are listening in is that number one, if you don't have that kind of time, because that's usually everyone's like, I don't have 2 hours a day, just find some time to just start working on your mind. And that may be, if you haven't read the book Miracle Mornings, that's a very, right? It's a great, simple book. If you're a brand new investor, just grab that. It's a similar thing. Get up early and just carve out 10 minutes at home for yourself to think, to journal, and then to just do something physical. It'll start changing everything about your day. So I'd suggest doing that for sure. But mindset is everything. The thing about real estate is that it's new. And many of your friends, Ann, I know are very, very smart people. You've worked very hard to be where you're at. You've taken a lot of years of school. And to add something new sounds hard. And it sounds like a lot of extra effort. But I will tell you that the hard work is going to be the best work because it's going to lead to great results. And so we have a human nature to not do hard things. We try to avoid it and do the easy things. But the hard thing here is just getting started. So if you can create a mindset as a new investor to say, I'm going to do it. And if you don't know anything else, the simple thing that you could say to yourself is this year, I'm going to buy one property. That's doable for everybody. I 100% guarantee you that if you put your mindset to it, even if you've got bad credit and even if you've got very little money in savings, if you give 12-month focus to buying your first asset, it will happen. So long as you got a good power team. But it starts with your mindset. Because if your mind's like, it'll never happen, it'll never work no matter how much money you have or how bad a credit you have or how good a credit you have, right? Yeah. But if you just tell yourself, I'm going to do it this year, and then just slowly let it build from there, then you're going to discover that this is actually quite an enjoyable industry to be a part of and great passive income to be involved in while allowing you to enjoy life with a mindset that takes you forward to dreaming big dreams and doing huge things.
Yeah, I think there's so many good things in there. The setting your goal to 1 unit per year is doable for everyone. If you just set that goal, then the next 90 days, you just take micro steps. I will go to the library or Hoopla or Audible and borrow Rich Dad Poor Dad today, right now. And then listen to it within a week. Then I will reach out to one friend for a referral for a real estate agent. You just take those micro steps and believe you can do it. And eventually you will get there, because that's how I got from zero knowledge to real estate. I read one book, There's No Free Lunch in Real Estate recommended by my friend. Took one course, a year later, got a fourplex from nothing at all. So the mindset is huge. And I completely concur with you. The morning routine, waking up early is awesome. Writing down, because I write down like my top 3 priorities for the day too. Sometimes I do it the night before. And then so I wake up and I just started. Like this morning, I started at 6 a.m. and finished my top task by 6:45. And you decrease that cognitive load with what you're talking about, so it doesn't create that stress. And you've already won for the day, and the sun was just coming up. And then I finished my top task, and the sun came up. I was like, oh, okay.
Yeah, it's like the rest of the world just waking up, and I can take a nap.
Yes, exactly. So I completely agree with your tactic. And you're also working out, and that means you're flooding your brain with all the awesome neurotransmitters to kind of help you be creative, to learn, to get into flow state. So those are all fantastic tips. So
I love it. I love how you make it sound so much smarter than what I actually do, but that's you got all the science behind it. So, but I love it.
I'm currently taking a Flow Research Collective class by Steve Kotler. He wrote the book Superman, and essentially he's talking about how to hack flow, how to get to flow states easier so it can be 500x more productive.
Awesome. I love it. I'm so excited.
It's a science behind it. And the thing you have mentioned about nutrition, do you have any other morning routine that you always do, or any nutritional tips that you have, anything at all?
For me, I told you my weakness is ice cream, and I love bread.
Yeah.
And being Asian, I love dim sum. So those are all really, really bad things. But for the most part, I'm pretty strict on my diet. I'm an intermittent eater, so I fast until about 10 a.m. So I work out on an empty stomach, so I do fasted cardio. And that works out really well for my body type. It's not great for everybody. But then I do my biggest meal in the afternoon, and I eat lots of meals during the day, and then my small meal is at night. But I stop eating by 7. But believe it or not, I'm usually in bed by 8:45. So it's pretty socially sad, but it's fantastic because I got kids, and so we all go to sleep early. And so the eating part for me is also part of the whole thing, because I noticed that you eat too many fried foods and you start feeling more lethargic, your mindset starts to drag, and you're not as sharp to make good decisions. I think part of the opportunity in life is to make great decisions when the opportunity presents itself. But if you're tired, lethargic, and taking a nap, you're going to miss those opportunities because you're just too tired. You're like, oh, I could go do that, but man, I'm just tired. I'm not going to do it, And then it's as simple as Anne's, putting out a blast. Hey, I'm going to go walk some properties in Houston. Anybody in town who wants to go? And if you're eating poorly and you're not exercising and you're tired, you're going to be like, no, I'm just going to sit on the couch and watch Netflix. Yep. But you may have just made a decision to miss out on all these networking opportunities and inspirational gems that would take your investing to a whole new level, simply because you were tired and lethargic, right? So very practical. And so for me, I never want to miss an opportunity when it comes. Now, does opportunities come at 9 p.m. because I went to bed at 8:45? Probably, but most of the time I'm okay missing those opportunities that come knocking on the door at 9 p.m. at night.
Yes, it's I talk about like nutritious food and energizing food versus food that bring you down, food with bright colors versus brown food. And I do what I call time restricted eating as well. Same thing. I do fasted weightlifting, and I don't typically eat actually noon or 1. And the latest I eat was maybe 6 or 7, but preferably 5, because I noticed like my sleep after tracking with the Oura ring, my sleep is like, the quality just goes up. I have more REM sleep, more deep sleep if I eat way earlier. So yeah, more.
What's the name of that ring? I'm going to write that down.
Oura. I have no financial relationships with them. And there are many other sleep trackers on the market, but this is just what I wear. Again, no financial relationships and not affiliated with government or universities. Yeah, full disclosure. I just noticed that, when I get an hour and a half to 2 hours of REM sleep and at least 2.5 hours deep sleep, I can win the day, because you're right, because your willpower goes down when you're tired. And when I went to the multifamily immersion event last weekend, the networking event went on till 11. And if I was tired, I wouldn't have been able to network with so many of the speakers to be able to, find people who would, show me the deals. There was no way. Yeah. So yeah, I felt like I was being coached by so many people in like 5 hours.
Yeah. And you would have missed that if you're like, oh, I'm tired, I should go back to my hotel room.
Yes.
And all of that would have been lost.
Yes, exactly. So I agree. And I know that we're a little short on time. I think the last thing I want to talk about, well, 2 things actually. Do you have any productivity hacks or technique or apps or calendar techniques, and to be able to balance everything you've got with family?
I mean, there's so many. I'm a technology person, so always experimenting with different technologies. As I use the iPhone, which really helps connect a lot of different things. I think schedule hack, for me, what I try to do is I chunk my time. So I'm trying hard not to be on email all day long, but just chunks of emails. I try to block calls. So I do most of my Zoom calls in the afternoons only and not in the mornings. So I honestly don't take calls in the morning. It's mostly admin time, strategy time for me. And it's also because I'm not eating yet. So I start to get grouchier towards 11 o'clock, and then I got to eat. I don't know how you do it till 1. So I just kind of know that that's my time in the morning for strategy and admin. And then the afternoon is really when I devote to other people. So helping other people on our team, or that's when we talk to a lot of our clients. So, and you'll remember that we had a lot of calls, but it's mostly afternoons. And
I do the same thing. So.
Oh, perfect. Yeah. So I wouldn't say they're really hacks, but I could see that for somebody who's just starting off, I have a lot of young folks on my team, and they're all over the board. Like they're on emails and texts all day long. And I'm just like, I can't do that. Like, just know that, there's blocks of time that we'll do this. And I think that works. For technologies, as working with us, the Google Drive is awesome. Google Sheets is great for us. Mondays is where we're switching over to for some team-based CRM type thing. That's basically it. We're not too fancy. Real estate's the one industry left that still involves a lot of people, and people touch and people talk, and I love that. So a lot of it, we don't automate because we need to be able to have communication person to person.
And do you have a cut off or power downtime so you can spend quality time with your family?
Yeah, we work 7 days a week, honestly, because it's real estate. And because I own so many companies, there's always something going on. But weekends are a little bit slower. But because I have a passive income, last year we spent several months of our days in our motorhome traveling the country. So I get the blessing of when I say I work 7 days a week, it's super flexible. And so I take the kids to school when they need to. I pick them up after school at 3:00. I help my kids with homework. So, it's very flexible, but I don't personally have a block of time that I block off because of my industry. But I typically, evenings are a little quieter in terms of trying not to be on a lot of calls. But as you know, Anne, sometimes you as a client's like, hey, I'm only available at 6:30 for 20 minutes. It's like, all right, I guess we're doing 6:30 at 20 minutes, because, depending on the industry, that's what we do. But yeah, I think the balance to me is always remembering what roles can only I do. And to be honest, somebody else can be a great agent. Somebody else can run our construction company. Somebody else can actually be the personal trainer at the gym. But there's nobody else who can be husband to my wife and father to my kids. And so those are really important roles. So no matter how busy I am, and even if I work every day and all day, there's times in which it's very important to balance the things that only I can do. So that's the mindset that helps me to not quantify time as more just qualify that these are important and these will always be the big rocks that go first.
Yeah, those are really good tips. First, you get to spend already more time with them and have more flexibility with them than usual because of passive income. And I'm always telling people you need to automate, delegate, or eliminate, but you cannot do that with your role as a husband or your wife.
Yeah, you could try, but it doesn't usually work very well.
Right. So, when you are in that role, be present and do the roles well, essentially, is what you're saying, right?
100%.
And I think the last question I want to ask is that, with everything that you're doing, this empire that you're building, your goals, I want to know, in the end, now that you have the money, when you have the time, what would you want? Is there a mission or any sort of contribution you'd like to essentially devote your time and money to?
Yeah, well, that's a great question, actually. So for me, like I shared earlier, one of my passions is helping other people develop a portfolio. So we're developing a coaching program soon that we're going to pretty much just give away for free, just because I believe so wholeheartedly in the life-changing power of passive income. In fact, I believe it so much that it's the license plate on my Camaro. It just says passive because it's just, it's such a huge part of what I feel is what I can give back to the world is help educate people and inspire folks. But then at the same time, we make really good money and we live in a first world. We drive nice cars. I've got, a big motorhome and a beautiful home. And so a big part of what I believe in doing is making a difference in the world. And so we sponsor an orphanage right now in a remote village of Myanmar, which is where my ancestors are actually from. Some are mixed. And so it's really powerful and fun to see these kids grow up that we get to actually, basically pay their whole education and food and everything because money goes so far over there. And then I'm working with another investor right now that has a massive network. And we're looking at building a foundation where we're going to buy large apartment buildings as a syndication and have investors come into the syndication and get a very nominal return because the majority of the return we're actually going to take and actually build wells around the world, provide housing, and take care of medical needs in third world countries. And so that's really exciting. So that's in the works right now. And that's something we get to do because, we have the ability and the time and most importantly, the mindset. So yeah, thanks for asking. That's going to be a fun one.
That's awesome. I'll definitely get the info once you have everything set up from you. Like last year, I donated something to Charity Water. Essentially, they're building sustainable water, like either wells or whatever type, depending on the location, for a community, a population to have clean water. So let me know the info so I can support. And where can people find you? Do you have any social media or contact email? How would you like people to get in contact with you to learn more also about these courses that you might be having? That's awesome.
Yeah, you're always welcome to come check us out at teamkekoa.com. So that's teamkekoa.com. That's our website. And there's ways to get in touch with us through there. That's probably the easiest. My email address personally, just because you're all friends, is kekoa@teamkekoa.com. And so, yeah, reach out. And I do have social media, Kekoa Lwin. And so you're welcome to check us out in any way possible. Happy to serve any of you, especially if you're brand new and you're not even sure who to work with. You don't need to work with us. If you've got questions, just drop us a line. Again, this is our passion. And we don't do this for money anymore. We do it because of the opportunity to help others. And so we'd be honored to help anybody who is listening in and part of Ann's network. We'll do whatever we can to help you build that, because truly the power of passive income is going to transform your life.
Thank you so much, Kekoa, for your time. I'm sure for all the beginners and or even people who just started in real estate, all of the tactics and tips, tax advantages, the reasons why, their goals, like we talked about so much. So I really am grateful for the value you have created for the team, the community. And I am excited for the future, for your future and for everyone else's future who is listening. So
I'm excited to continue to work with you too, Ann. So thank you so much for having me on. And I'll look forward to chatting again soon.
Thank you. And we'll have all the links in the show notes and the book references in the show notes. And then just remember that everything we need is already within us now. Thank you.
That's it for today's episode. Head on over to iTunes and subscribe to the show. One lucky listener every single week that posts a review in iTunes will win a chance in the grand prize drawing to win a private VIP day for a health and life makeover with Dr. Ann Sung herself. Then be sure to head on over to itsnotrocketscienceshow.com and pick up your free gift from Dr. Sung. Then join us on the next episode.